Welcome to our weekly Forex market analysis call, and this is in preparation for trading for the week of October 1st to the 5th, 2018. Just a quick disclaimer before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. All right, so as usual, we'll start off by taking a look at our calendar here. Last week, a big thing that happened was our FOMC meeting. So the Fed didn't change anything. They said they're still going to do another interest rate hike later this year. So that's still there. They're still looking at tightening the monetary policy. So they are comfortable with the pace of growth in the economy. So overall, the picture that they presented was the same as before. So there were no changes, positive or negative. And as a result, we saw that at first, there was really no response to the FOMC, but then we saw US dollar strengthen after that, because overall the monetary policy is still tightening. Now, coming up this week, so we have a whole bunch of PMI numbers. PMI numbers are leading indicator for retail sales, so these are very important numbers. So we have for British pound on Monday, so we'll have to keep an eye on that. ISM manufacturing PMI numbers for the US, so again, these numbers are important. Now, we do have a central bank here. We have RBA rate statement, so Reserve Bank of Australia. They're not expected to change rates at this point. Same thing with New Zealand dollar last week as well. New Zealand, Reserve Bank of New Zealand did not change rates, and they did not change their monetary policy. So Australia, sort of along the same lines, they're not wanting to change anything, even though a lot of different central banks are tightening the monetary policy. Both Australia and New Zealand are holding their interest rates stable, and they're keeping their monetary policy stable here as well. So if any negative comments come out in terms of their concerns around trade wars or the rate of growth of the economy, those will be negative for the Australian dollar. But otherwise, if they just hold everything the way it is, or if their outlook is positive for the economy, then that would be positive for Australian dollar here. All right, and then we also have Fed Chair Powell speaking. Anytime there is a central banker speaking, there is a chance for prices to move. So keep that in mind based on their comments. Wednesday, more PMI numbers. Services PMI number here for British pound is a very important number because UK is a services-based economy. So important number there. And this week, we have ADP non-farm employment change. So this is a precursor to our NFP. So that will be important. We have non-manufacturing PMI, and then we have Fed Chair Powell speaking once again. Most important of this will be on Friday. So here, Australia, we have retail sales on Thursday. Friday here for the US will be the most important piece of news, which is a non-farm payroll. So this tends to come out at the beginning of the month. So it is the first Thursday of the month, we are going to get non-farm payroll number. This tends to move the market as well. So here we are looking at a few different numbers. So one is the non-farm employment change. We're also looking at unemployment rate. If it increases, that will be negative. If it decreases, that will be positive. Important number to pay attention to is average hourly earnings. So if employment is stable, but average hourly earnings are not moving upwards, that can be a problem, and that can usually have a negative impact on the currency. So all those three numbers will be important, but average hourly earnings will be very, very important. So we have to look at, when we look at the numbers that come out here, we have to look at all three numbers. And that's what the price move will be based on. We also have the same type of information here for Canada. We have trade balance numbers and employment numbers. Now for Canada, these numbers are very important as well, especially keeping in mind that right now we're going through the NAFTA negotiations, and we haven't really seen any kind of agreement reached between US and Canada. So that is going to have an impact on Canadian dollar as well, outside of the numbers. But the numbers together with the NAFTA backdrop will have a bigger impact. They are working on it right now. They're negotiating the NAFTA. I'm not sure, it's been delayed so much. I'm not sure if it'll really come out this week. But any comments in regards to if a NAFTA deal is reached, that should be positive for the Canadian dollar. But if it's not reached, if they're, again, fighting over it, that could cause a negative impact on Canadian dollars. So keep an eye out on the, or ear out on the news feed to make sure we are capturing all that information as it comes out. So now let's move on to our charts. For our charts here, so in terms of euro dollar here, last week we had a bullish number here, our bullish candle close for the week. And as a result of that, we were looking for price to move up higher. However, we had talked about how price is into resistance at this point. And ahead of FOMC, things tend to sort of go sideways, which they did. And then we didn't really see a drop till after FOMC came out. So for the last few days here, or the first few days of the week, price was just going sideways, not really going anywhere. And then after FOMC came out, we saw this move, and then price dropped since then. As a result of that, now we have a bearish engulfing candle close for euro here. So what that means for us is that we're looking for price to drop. So I'm looking for price to move back, move down further. Anytime there are big moves like this, I would look for a pullback before it drops. So I'm looking for price to come down into the bottom of this range here. 1.1500 will be the first target. And then a second target, if we do get there, will be a 1.1380 level, which is basically into the bottom of these candles here. So my bias is to the downside for euro dollar, and I'm looking for something like this in terms of the move. So pullback and then a drop. So bearish bias for euro dollar. Pound dollar here, similar story. We did have a bearish, or we had a pin bar the week prior to that. So now we have another bearish pin bar here. We are into support. So again, something to be mindful of. With this one, I would be looking for a drop here as well. Bias is bearish. Next target is a 1.2780 level. So we have a bearish pin bar here. So back to back, two bearish pin bars. So looking for price to drop further. 1.2780 will be the target. Aussie dollar here. Aussie dollar was interesting. So let's get rid of some of these. We have overall, we have a downwards trend, but commodities have been up and down. So right now we are sort of, we had a pullback. So we pulled back into this 0.73 10-ish level, into this previous support and resistance all the way from here. And price wasn't able to go higher. So we have seen price drop. So with this one, we do have a bearish candle close here. So I'm looking for price to go lower once again. Target here would be 71.50 level. And then we could likely pull this lower here. And it could go into the bottom here as well, 0.7100. So bias for Aussie dollar would be bearish. Now, with the Aussie dollar, we do have that central bank statement, but again, bias is still to the downside here. New Zealand dollar here. So New Zealand dollar, similar story here. We are into this wall of resistance here. Price has been range bound in this one for the last few weeks here. As we can see, for 4, 5, 6 weeks here, price has just been sideways. So now we have the rejection of the top of the range. I would look for price to move towards the bottom of the range here. So 0.6500 will be the target to the downside. So looking for price to drop here. So bearish bias for New Zealand dollar. Dollar CAD here. This one was interesting because even though euro and pound moved up, this one didn't. And this one again went into resistance here. And we did have a pin on this, and we had talked about that last time. So with this one, we literally just dropped from there. So we have a big bearish engulfing close here. Now, when we have big bearish engulfing closes like this, we tend to get pullback. So I would definitely look for a pullback. And with the backdrop of NAFTA negotiations that are going on currently, those will have an impact on this as well. But overall, bias is bearish, and I'm looking for price to go into 1.2880. And in terms of the move here, we could get something like this. So a bit of a pullback into this previous support resistance level, and then a drop. So 1.2980 is a good level to look for a potential pullback, and then a drop. So bias is bearish for dollar CAD as well. Euro pound here. Euro pound was interesting in the sense that it didn't really do much. It's just been going sideways here, and we have seen again the sideways move here. I would look for price to come back, test the bottom here, 0.8850 level, and then it could potentially go lower if it breaks the low here into 8820 or 8800 level. So overall bias is slightly to the downside here. So I would say 8800 would be the target for euro pound. Euro Swiss franc here. This one has been all over the place. We saw a drop and then push to the upside here. Overall though, we have a bullish candle close, and now we are into support resistance level, but there is room to go further here. So next target here would be 1.1450, basically this support and resistance level. And this is where we'll have to see, is it able to get through, because there is still room to the upside. So 1.1480 potentially is a better target here, higher into the support and resistance level, back into this. And then we run into important support resistance, because as we can see, price has reacted at this level several times, and we'll have to see if it's able to break through or not. So right now the target is, the bias is to the upside. 1.1480 will be the target. Pound Swiss franc, similar thing here. Swiss franc actually did not do so well. So all the different currencies have moved up against it. So we have a bullish candle close. And this one actually had a pin bar. So we have a failed bearish pin bar because price just ran into support here and turned around. So we have a bullish engulfing candle close here. As such, I'm looking for price to move up higher. Target here would be a 1.3070 level. So looking into this next support and resistance level. Now, do keep in mind, we are into important support and resistance at about 1.2900. So we could see a reversal at that point, because as we can see, price came here and turned. Price came into this level and then turned around here as well. This one, it went through. So we have to just be mindful of that there is resistance very close here into 1.2900. But if it gets through that, 1.3070 will be the target. Dollar Swiss franc, this one has done really well because US dollar was strong, as well as the Swiss franc was super weak. And as a result of that, we have seen this cross go up drastically. Now, keep in mind, when we do see these big moves, price can turn around, or a lot of times it can pull back. So I would be looking for pullbacks on these things, because that's quite a move. However, those moves can also keep on going. Like we have seen here for 3 weeks in a row, price just kept on going to the upside. So here we had a big move to the upside, but it continued on. Similarly here as well, big move to the upside, but it just kept on going. And that tends to be also the Swiss franc characteristic. So it tends to do this kind of thing. So keep that in mind. So bias is still bullish. We are going to be coming into resistance at 0.9830, but overall I am looking for a bullish move here. So my first bias would be to the upside. 99.70 or 99.80 in fact will be the target for dollar Swiss franc. So the type of move that I would anticipate here, again, the markets do tend to be dynamic, so keep that in mind, but this is the type of move that I would anticipate: pull back and then a further move to the upside. That would be the biases bullish for dollar Swiss franc. Pound yen. Pound yen hasn't really done a whole lot here. We did see price move up higher. The momentum is not quite there because we haven't really seen the break of the high. Now, for this week, because we do have a bullish candle close, however, It's not strongly bullish. So what I would look for is price to go and test the high, and then the chances are it can drop from there. So that's the move that I'm anticipating. So right now looking for a push up higher into 149, about 80-ish level, and then potentially looking for a move from there. So overall bias is slightly bullish, but I would be looking for this resistance because price has not broken this level in quite some time. So I would expect sellers there. So bias is bullish up to 149.80 and then looking for potential drop from there. Euro yen didn't really do a whole lot. We have a neutral candle close. Price went into this resistance, and then this is neutral. We have a pin on both sides, and we have a small candle body close here. So bias is neutral at this point. We could see a retest of the high once again, and from there we could see a move like that. Now, if it does break out, then of course we could go higher, and the next support and resistance would be about there. But at this point, the resistance is very, very important. If it holds below, like it has done since January of 2018. So this is a yearly resistance. That's why it's very important. So it's done this entire year. So if it holds below 133, chances are it's going to drop. But now if it does clear, then of course we have to look for a higher level, which will be back into this support and resistance. So we're looking at about 134.20-ish level. Euro yen, this one again, and sorry, not euro, dollar yen. Dollar was very bullish and yen was not very strong. As a result, we have this move to the upside. So at this point, this is looking bullish, and I will look for price to go higher into the next support resistance level at 114.50. So bias is bullish for dollar yen. Aussie yen here, this one hasn't really done a whole lot. We're just sideways at the moment. Overall, the move is still bullish, and if the commodity currencies stay strong, this could go up higher. But again, it needs to clear this resistance at 82.50, and if it does, we're looking for 83.80 level, which will be the top of this little range that price has been trading in. So right now, the bias is bullish for Aussie yen. New Zealand yen, this one is looking bullish, but doesn't seem to have a lot of momentum. And we are right into resistance here at 75.50. So if price is not able to break through the resistance, I would look for a similar move. And it will be a similar move across all the different crosses here as well. This is kind of what I would look for, but there is room for it to go all the way up into 76.20. And then do that. So bias currently is to the upside for New Zealand yen. And now, actually, let's do CAD yen. So CAD, again, we have NAFTA. NAFTA will be very, very important. So this one is looking bullish, just like dollar yen. And I will look for price to go a little bit higher into this 88.60 level. And if it gets super bullish, then if we sign, let's say that there's a signed NAFTA deal, this one could go higher even into this 89.50 level. So bias is bullish for CAD yen. Let's look at gold now. Gold has been interesting because, as we can see, it was trading in this range and then it dropped and it has pulled back. So this is where we are currently. So far, it's still holding below this 1214 level. We had a pin, we had this tweezer top type of a pattern here, and we have seen a drop since then, but then prices pulled back. So what that means is that it doesn't really have any true direction at this point. Overall bias is still to the downside, and I think this one could drop further, especially if US dollar goes up this week. So we have 1170 will be my next target to the downside for gold here. So 1171, which is our next level here. If US dollar becomes very strong for some reason, then 1160 will be the next target to the downside. But this 1171 is my first target here. So bias is still to the downside. It does not have too much momentum though. So we could just see it go sideways Just do keep that in mind. It could just go sideways back and forth here because there isn't a lot of momentum, just like this one. See how it just hung around here forever? This could just hang around here for a long time as well. Right now, overall bias to the downside, but does not have strong trend in place at the moment. Oil broke up. This is why Canadian dollar actually was strong, because oil went higher here. Now we have, it was trading in a range there for a long time, and we had talked about how it was holding above the previous high. And when price does that, it tends to go up higher, which it did, sorry. And now we are into or close to the resistance. So 73.80 will be the target to the upside here. But if you were to take a look here, we are into this, my apologies here. So if you take a look here, we are into this strong resistance that price has not broken. We have not seen this go here since October 2014. So major resistance, which means there can be a turnaround just like this one. But as we can see, when price turned around here, it did not drop too much. So overall bias here is still to the upside. Our trend is still, overall trend is still bullish here, and we could get a breakout, but be mindful that this is a resistance from 2014, which means it's a very important support resistance level. Having said that, the bias is bullish though, and we could go higher. If it breaks this high, the next level that we are looking at is 76.90 level. So first target would be 73.80, and then if it breaks that, 76.90. So there's lots of room to the upside once this resistance is broken. So keep that in mind, bullish bias. But be aware of this major resistance in place right now. Let's take a quick peek at copper here. This is what I was talking about. When we have a big move like this, sometimes we get this, these pullbacks, or price can change directions. So in this case, price came into this resistance. It's holding below it. Now, having said that, it does not mean that it's completely bearish right now. This could just be a pullback for it to continue higher. So overall bias is still to the upside, but if price does this and then does that, chances are it's not going to go higher. Instead, it's going to drop, and then we're looking at 2.70 in terms of where the price will go. So in this case, the bias is bullish, but we are into strong resistance at 2.85. If it does not break that, if it stays below, I'm looking for it to drop further then. But it is bullish. And so we did oil. So we have done everything here. We'll take a quick look at Bitcoin, and then we'll hop on to the dollar index. Bitcoin just going sideways, hasn't really done much. It's trading in this range. It has traded in this range forever. And right now it's just sideways. We are into resistance. It's holding close to the highs, which means it can break through. And if you were to draw a trend line here, we are still slightly biased to the upside. So I would look for interaction at 67.61 area. If it breaks through that, then we are looking at 69.80. Otherwise, I'm just looking for it to go sideways. Okay, let's go on to the dollar index real quick here. So dollar index here, we are at an important level. So as we can see, we are into this support resistance level right here, and price is starting to sort of round off here. What that means is that it could drop from here. So let's go on to the candlestick chart here. So we are a little bit closer. So this is where we are. So we had this head and shoulders type of pattern. Price could not hold below this neckline, and we have seen price come back higher. So that's a daily chart. Let's go to the weekly. So in terms of our weekly chart, we see a bullish engulfing candle close, which means price could go higher. And the next target higher here would be at 95. well, about 96. So 96.00 is the level I would look for, which is the bottom of this pen right here. So that's 96.00 would be my target, but we could get a pullback and then a push to the upside. But looking at a daily chart here, so there's room for price to go up higher here. However, we are right into these pins here, these little support resistance. So there's a bunch of support resistance here. As we can see, price has struggled with this level forever. So we could see that struggle on this side as well. So I would be careful of that because it can actually turn around because the daily close is not that strong, which means it can push lower before it starts to go higher. Greg, you're asking about Euro Pound. Let's take a look at Euro Pound once again. Euro Pound, not much going on. It's just sideways at the moment, a little bit biased to the downside. Got a lot of charts here. Here we go. Euro Pound, yeah, so a bit biased to the downside here, looking for it to drop into 0.8780 levels. So we have a bearish candle close, but it's kind of sideways for the last 4 weeks. It's just been going sideways. But this pair does tend to do a lot of sideways moves here. So it is bearish candle close, so looking for price to drop into 0.8780 level. Any other questions? Okay, if there are no other questions, I would just like to point out that I'm currently doing a promotion that actually ends today. So as of tomorrow, this promotion will no longer be available. So if you are interested in it, this is for the trade room. So this analysis that we just did here, we do this type of analysis every single day on about 20 or so different pairs. And if you like this analysis, we basically look from daily perspective. We'll take a look at what levels are the best levels to take trades from, what direction I expect the price to go, that sort of thing. So, but I also have private Skype group that you can join, and this is where I share my ideas in live, during live trading time. So I will post charts and I'll mark things up and share those ideas. When I take any trades, I do call out trades in the room as well. So you can take trades either from the analysis that we do the night before, or you can also look at the trades that I take. So I post those live trades in the trade room or in the Skype room with take profit targets, stop loss, and entry levels as well. Every Friday we do every Friday we do an educational webinar where I talk about any particular topic. And so that's more on the educational perspective. The trade room runs 4 days a week. So we do Tuesdays and Fridays are New York session, and then Wednesday and Thursday is the London session. So if you're interested in joining me, currently I'm running this promotion where the cost is $997 for the year. Generally, it's $97. I've been doing this at $97 a month for the trade room. But in this case, you get 2 months for free for the trade room, but you also get my course, which I currently sell at $497 on my website. You get that as part of this package, as well as my pivot point course and my pivot point indicator. So all of that, the cost is $997 a year. And this one, it ends on end of September, which is today. So by tomorrow, things will change. I am changing the way my courses and stuff are. I'm redoing my courses. And so the course will be, trade room and the course will all be one bundle together for $3,000. And there will be no other monthly or anything like that. So if you're interested either in joining the monthly trade room, or you are interested in joining the trade room for the year here, this is the best price that you're going to get for the foreseeable future. So I think it's a great deal. And if you're interested, please feel free to go to this link that I have, bit.ly yearly trade room. So that's any questions before I wrap it up here? Okay, if not, so you guys have a wonderful rest of the weekend and a great trading week, and I'll see you next time. Bye for now.